Let's go in the order of business, what we do first of all. Hey, good job, Alex. Alex, our longest term member in the room. Love it, buddy. Great work. Let's go with that first order of business in the room. The first thing we establish, okay, let's go over methodology, what we do first. My methodology is to buy and sell retracements with trend direction. What I found over the past 20 years to work, I've seen thousands and thousands and thousands of indicators. 99.9% of indicators are worthless. Why? Because they don't show you where the order flow is. You must know where the order flow is or price action at all times to have the edge over your trading opponents. We already know active trader has come out several times and said the volume has come out of the S&P, the big contract, on the floor. So the floor traders do not have the pull anymore. Around 80-85% is all electronically based. Since we know we're electronically based, right, we can use market profile that's been around since 1985. Okay, it's been around since 1985 to let us know where to buy and sell retracements with trend direction. And it's as simple as that. Don't make it any more difficult. There's no holy grail. You have to find the next indicator where someone's come up with a great idea in the market, right? There's no great ideas in the market. There's no holy grail. There never will be. All you got to do is find the order flow. Market profile has worked for 30 years. 30 plus years right now, right? Almost 30. 1985 it came out, right? God bless Peter Stoudemire and Associates, right? If it's worked for 30 plus years, there's been thousands and thousands of indicators that have come and gone. Market profile has still tested or still has shown that is the best way to buy and sell retracements in the market. My market profile today that I called out in the room to look for stopped to the exact tick. Volume profile down here at 0458, that is the exact swing high on crude oil. Exactly to the tick. Why? What we do is this, the methodology. Since we know market profile is very, very accurate because it follows order flow. We know we're in an electronically based market. So the more and more that the volume comes off the big S&P 500 contract and the more and more that we have less influence from floor traders, etc., we're getting more electronically based. These indicators are going to be more accurate. You think it's accurate today? Wait for another couple years. We've been doing this for 3 years. Stop to the exact tick today. It's only going to get better because this follows the order flow, what's going on with the market. So what we have to do then is we have to find the highest probability trade on a retracement. Here's the order of business. The first thing I log in, I concentrate on these black charts. I look at the overall trend direction. The trend direction, I need to know there's only two things the market can do. What I've learned over 20 plus years, the market can only do two things. It can go vertical or it can be chop market. It can be a chop or range market. I must know how to trade a chop market and I must know how to trade a range, market. I can't know how to trade a trend. I now trade a chop also. So you got to ask yourself, am I a trend up, trend down, or flat or chop, right? Only two things you can do, vertical or go chop. Immediately I asked you guys when I logged in at 8:15 this morning, are we in an uptrend or downtrend? How you do that is look at these moving averages. I have two moving averages on here. I got a 20 and a 50. It's no secret. Moving averages to me, if you buy and sell off of them, they're worthless. They're absolutely worthless. Moving averages cannot help you buy and sell support and resistance because you and I do not know where it's going to stop at. That's not order flow. Moving averages are lagging. If anybody tells you to trade off moving averages, they're wrong because you can't do it. It's impossible for someone to predict where to buy and sell off of a moving average. You can't do it. You don't know which one's going to stop at. You're going to take a lot of big drawdowns. But what we can do is use it for trend direction. So what I use these moving averages for is trend direction. And I use them if the 20 crossed down to the 50, I established this morning, I asked you guys, are we in an uptrend or downtrend? You guys said we're in a downtrend. You're exactly right. So we knew way before this came up, this is not after the fact baloney. I put the number one at 8:15 this morning. Put the number one here at 8:15 this morning. It stopped at the exact tick on my volume profile. We do this every single day like this, right? So what we got to do is this. We know the trend is down. We sell the first test of high value area. That tells me the high value area is where the order flow is going to be. Once it comes within 2 ticks of the high value area, you look for a red bar reversal. If you look at my Ninja charts, we have a proprietary Renko bar chart we use. A lot of traders use a 3-sim Renko to pull themselves in. As you can tell, the reason we have a proprietary Renko bar type that no one can get outside of our room is that a doji or spinning top will always be the swing high or swing low with my proprietary Renko bar type. You can see the doji formed right exactly at 58 at the swing high, right there. Then you look for the red bar reversal right there. Then you can enter your trade. You enter your trade after a red bar reversal to pop in that trade short. Okay, on number 1 trades, you've got to use a maximum hard 15 tick hard stop loss. Don't use any more than that. A lot of traders use a 13 tick hard stop right across the board. Almost all my members, long-term members that on average use around a 13 tick. They don't even use a 15. So that's your red bar reversal. So what we did is we established the moving averages during a downtrend. So we sell the first test of high value area or the red dots on the first test of these value areas. I established the red dots were at 58. My price profile, which is my hedge fund I've been using since 1996, was at 0460. I had 2 times confluence. I mentioned at 8:15 this morning that would be 8:15 to 8:20 this morning, that would be the number 1 sell, and I even marked it on the charts. I put this number one, so you know exactly where to sell the first retracement, where the high probability sell was. So once you come within 2 ticks of 58, look for the red bar reversal. I like looking for the doji or spinning top. Give me a heads up. We had a perfect doji at the top. There's your red bar reversal. You can enter your short. You got a 15 tick hard stop. Then what you do is this. You look for the first target to get out. A lot of you guys are using your automated trading dome to get you out, the ATM strategies. If not, use my symmetry dots. You should sell 50% of your position, as I'm educating you traders, sell 50% of your position within 2 ticks of this level. If it's at 37, you put your stop in, your target in at 39. So if I'm short at 52, your first target is 39. Okay? To make $130 on your first contract. Your runner can be the second set of symmetry dots to be able 30% or 75% of your position. It's all the way down here at 16. 16 plus 2, 19. 19 plus 2 is 21. You can put your second set of contracts right now to get off at 21. Let the runner run. Okay? So this is exactly how we do it. Let's go over this again, so let me slow it down. The moving averages, the first thing you do, I don't care about anything else. I don't care about J signal on these white charts. I don't care about market profile on these black charts. The first thing I have to do is establish in my trend or chop. If I'm in a downtrend, I can't take any buys. I cannot buy low value area. I cannot buy these green dots right now at 31. I cannot buy them at 42. I can only sell the first test of the red dots because that's where my order flow is going to be on selling retracements with trend. That's all I can do. I cannot take any longs. You got to have a bias to have the edge in the market. All right, so we established that. Before it came up to it, we said volume profile is at 58 on the bottom left chart. That's volume profile. Price profile, which was the hedge fund, was 0460. So before it even got up there, we established we had 2 times overlapping confluence. The key is this. I have 3 market profiles in this room. 2 off these black charts. The bottom left is volume. The middle is price. The hedge funds including like market profile. You treat it like market profile. And then I got developing profile over here on your own Ninja charts. You can do a number 1, number 3 off also. Okay? So it got up there, it stopped at the exact tick as projected, red bar reversal, 13 to 15 tick hard stop, symmetry dots first target, overall targets of 19 on the roller, and also down here on your symmetry dots. That's how we do it every day. Now I got a little cheat sheet for you guys. Junior helped us out doing this a while back. Go to the bottom right on documents when you log in. When you log into the OmniVia viewer, go to the bottom right, hit documents. Look at market profile trading rules. If you blow that up, it says in a downtrend, sell the first test of HVA. We nailed it to the exact tick. And that rule has never changed. We don't change our charts. We don't change our method. We don't try to fit indicators to the market. This is exactly the same way we've been doing it. We don't change it at all. You just learn two setups. You learn a number one on a deep retracement and J signal. I have it right here also. J signal gave us the bullseye. J signal worked also. That was a number 3 and also a number 1 together. There's your J signal trade also with the bullseye. So I had a number 1 and a number 3 together because J signal says this. Let me blow this up a little bit. You don't got to be the smartest bear in the woods to understand how to trade J signal. I teach these traders one setup on J signal. If we turn a red triangle and my 5-minute moving average crosses over, the first thing I tell traders to do is sell black. Sell the first retracement to the black. Or if you get close to it, watch for the first bullseye. Red dot, Fibonacci dot with the bullseye. There it is. The exact bar to enter right there. Red Fibonacci dot with the yellow dot confirms divergence is in the trade. The bullseye caught the exact trade also. So my J signal caught the exact swing high. You're 1 for 1 on that with my 5-minute crossover. And I pointed that out in the trading room before it came up. I said, we got the 5-minute crossover. We got confluence on the number 3. And consequently, my number 1 called it the exact tick. We cannot get better than that. There's no indicator that can get better than market profile because what it's doing is showing you where the order flow is, right? There's no holy grail, right? There's not ever going to be a holy grail out there. So we can only trade where the order flow is. Order flow is showing where volume and price profile is and developing. And we have those indicators for you. But you must look at the first test, right? We must have a hard stop in there because we know all of them aren't going to be right, right? So to be a consistent, profitable trader, we know that if it's wrong, stop yourself out at a small stop. This is a very defined trade because our stop was just outside J signal. Very small stop on these trades. Right? That's all we do. All right, that's called a number 1 trade and a number 3 trade with trend. Number 1, number 3 trade with trend. That's a first bullseye on J signal that we talked about also before it came up. Congratulations, you guys. I want to make sure we're on the same page. We can be done by 9 o'clock in the morning, guys.